So in this video, I'm going through credit spread basics and how to pick the right strike price. Okay, so if you know anything about credit spreads, your strike price is what determines everything. Your risk to reward, the amount of money you collect, and your theoretical win rate. So let's walk through how to pick the best strike price so you can make more money and win more often. Okay, here we go. When we're looking at it, the first thing we need to know, or at least what I look at, is what is the overall market trend. Well, if we just zoom out here, you can see, well, the market trend looks pretty neutral, right? It looks like it's staying at the highs here and hitting the lows here, so it's pretty neutral. A pretty neutral stock means that we don't really know which way it's going to go. So if we don't know which way it's going to go, then I'm going to zoom in a bit closer and look at, okay, based on a closer time frame, what does it look like? Well, it looks more like it's trending up, right? And we can do this by adding different types of indicators to our chart, like a moving average line or a Bollinger Band or something like that. But let's by default say that this looks like it's moving higher. If it's moving higher, we're going to sell put credit spreads. A put credit spread is where you place your strike price below the current stock price, and you make money as long as the stock stays above your level. So how do we pick the best one? Well, there are a ton of different ways to do it. Once we know the general direction the stock is going and what type of trade we want to put on, like a put credit spread versus a call credit spread, then we need to look at, okay, how far out are we going on the put credit spread? Well, again, it also comes down to your expiration date. So if you don't know what expiration date you're picking, make sure to watch my video on the channel on expiration dates, because again, that's going to explain it more. But anyways, let's go down here and say we're doing a 3-week expiration. So again, we're going to come down here. So 3 weeks, so it's going to be roughly 25 days. That's 18. Let's go 18. 18 days out. June 23rd is going to be the expiration date we're on. Okay, cool. Now, how do we know this is the put side? How far out, which strike price we want to go? One way of determining that is by using what is known as delta. Okay, so our delta here, which is what you can change this column to, you can change it to delta. You should be able to do that on most brokers. You come down here, and your delta gives you your theoretical loss rate. Or for instance, if it's at 0.14, that means you have a 14% chance of losing on this trade. And so that means that if you flip it over, it means you have an 86% chance of winning with this trade. Now you have to understand, the higher your win rate or the lower the delta, the less money you make, because the less likely it is to get there. So you need to make sure you're weighing those pros and cons correctly. And so again, make sure you're doing that. I cover that in my mistakes video on how to calculate that number, if it's worth it based on the credit you collect and the win rate you have. Okay, cool. So again, we can use delta. Most people like to stick around a 30 to 20 delta, so they'd be somewhere in this range. That's within one standard deviation. So most people stick around here, let's say a 20 delta. So if they do a 20 delta, that means they'll sell this one and buy this one, which means they, that's a 50 cent, which means they'll collect 14 cents at this trade, and they have roughly an 80% win rate. So they make around $14 with an 80% win rate, and they have a max loss of $86. Again, these are, my default is 10 contracts, and then it goes up by 5. So that's a bit different for most people, but that's how that works there. Anyways, that is how you structure that one, is using delta. Next is purely using levels. So you can see our level here. We go, oh wow, okay, so the market's coming up. It looks like there was support here at 416. Also 420 had support that it broke above. So I think to be safe, 419 would be the support level I think it can stay above. So using more of a technical analysis approach. So 419 is my level. Come here to 419. And right there, now I collect $16 or $14, $15 per spread to put on this trade. And it looks like theoretically I'll have roughly an 88% win rate with this trade. Anyways, so that's kind of how that's sitting right there. You can use delta, you can use your levels, or you can use what Tasty Live likes to use, which is collecting a third of the width of your spread. So for instance, if we're doing a dollar spread, then that means you want to collect at least 30 to 33 cents. So that means for this trade right here, they would want to put on this trade here, 427, 426. The problem with this is that you're very close to being in the money. So if the trade dips even just a little, you're now going to be red and you're going to be selling that at a loss. And so that's why I like to go out further around to this level, the 20 delta level, and kind of place trades like that. Or you can follow a strategy that has been back tested to work. I have my trading handbook strategy, which tells me to always go out 3% if the market's trending up. And so if I go out 3%, if the market's currently trading at 429.50.5, and I do times, oh wow, I'm totally doing this wrong. Times 0.97 for 3%, that's going to give me 416.6, so 417. So it's going to tell me to put the trade here. And now, based on this trade, I'm going to have, it tells me I have a probability of 81%, which means theoretically I'll have an 81% win rate. But in actuality, historically, I know my win rate with this is a 93% win rate. So anyways, this is how, again, you can place different strike prices. Again, if you want my free trading handbook, again, it's available to you right here. No email, no nothing required. Just simply click the link in my description. It tells you and walks you through every single strategy I have, what market it works in, the entry rules step by step, and the back test so you can see what it makes. All right, guys, I hope you enjoyed this video of the basics. I'll see you in the next one.